Good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund, which means we actively taking positions in different asset classes, which include precious metals, base metals, foreign exchange, non-deliverable contract, CFDs, and many more asset classes. But like I repeated many of the times, and in every video, I repeat that we are a proprietary hedge fund. By proprietary, I mean no third party. I repeat, no third party can invest capital in our fund, which precisely means our fund do not ask any third party to invest in any of the firms. I'm starting a series which would be of 3 parts because it is relatively impossible for me to cover each and everything in one part, else it would be a 70-minute video, very difficult to edit and very difficult for a listener to cover 70 minutes. So I would be dividing this into 3 sections of approximately 20-25 minutes each. And in these 3 sections, I would be covering the outlook of monetary policy. Now, I know that we are in October end, precisely we are in November. And I know that after 10-15 days, people will start uploading Outlook for 2023. But I am uploading a different Outlook, which is Outlook of monetary policy. And that is something I feel is more important because the world is predominantly, I would say, dominated by the monetary policy or fiscal policy. Now, by monetary policy means that the central bank came into the picture and they play with the interest rates. While the fiscal policy means that the governments came into the picture and they play with the tax, their expenditures, the public expenditures, and so on and so forth. This is the theoretical definition of monetary and fiscal policy, which is being taught in the MBA institutions. And unfortunately, this policy is obsolete or archaic in nature. Because as we speak, very closer to 2023, there is a very thin line. I repeat, there is a very thin line difference between monetary policy and fiscal policy. And there is a reason to it. Because when these differentiations were formed, like monetary policy is determined by the central bank, while fiscal policy is determined by the governments, then there used to be a concept called risk-free rate. But unfortunately, as we speak today, there is hardly any, I would say, concept called risk-free rate. Almost 99% of the governments of the globe, they are sitting on a huge time bomb, which is called debt trap. And now even International Monetary Fund and World Bank are forced, I would say, to conclude that yes, this time bomb can explode at any given point of time. Henceforth, the concept of risk-free rate is only left for MBA institution to teach to their students. I'm shooting this video on 30th October 2022. And if you open the Google, you would get to know that Egypt got approximately 3 billion US dollars as a funding from International Monetary Fund. Egypt devalued, you heard me very right, devalued their currency, which is called EGP, Egyptian pound, two times. But the beauty is 99% of the people in the world do not have information about this. They, in fact, I haven't seen a single debate on a business channel, including Bloomberg and CNN, where people debated extensively, I repeat, extensively, that the impact of Egyptian pound devaluation would have a serious consequence for the globe. But we all know how the world and how the business media work. Henceforth, I strongly feel that the monetary policy outlook is more important for 2023. And I divided, you know, I would say this piece into three parts. Number one is the Federal Reserve, my favorite and the most corrupt central bank of the globe. You heard me very right. Guys, I would say I bought a book very recently from Amazon, and I always thankful to Amazon for making a platform whereby you can buy the books just as a click of a mouse. This book is about how Federal Reserve destroyed the American economy. I'm not saying that I studied the whole book, but I am at the fag end of chapter number 3. It will take me another 2 months to study the whole book considering my time schedule. But one thing I have to say, one thing I have to admit, that even at the fag end of chapter 3, the author proved that around 1200 rupees, which I spent for the book, is worthful. And author proved that I should have bought this book, I think, couple of years earlier. Because in this book, till chapter number 3, FOMC, which is Federal Open Market Committee, is defined. And the book is very clear, guys, it is very clear that how manipulative, even the book used a word called lobbying. So in this part, I would be covering about Federal Reserve, the most corrupt central banker of the globe. History is witness that United States regulators are always nothing but ex-bankers. Like if you see SEC Giesler, who is the current chairman of Securities and Exchange Commission, he is from Goldman Sachs. And he is not the only one. History is witness that whether CFTC, whether it is SEC, whether this is Federal Reserve, they are more or less but the ex-bankers. And I don't think I need to explain more in that regards. Henceforth, in this video, in this part, I would be covering about Federal Reserve, and I collated a lot of facts in that regards. Before I start, I first collated a very interesting data, and I'm thankful to the Google for providing us this data. I always thankful to Google because if you do your research on Google, you will get lot of data. That's a separate thing that people always disregard that. Number one is that the data is divided into two sets. So basically what I did that I checked the balance sheet size of the top four central banks of the globe. Number one is the Federal Reserve. Number two is the ECB, European Central Bank. Number three is the Bank of Japan, BOJ. Number four is the PBOC, People Bank of China. So I repeat, number one is the Federal Reserve. Number two is the European Central Bank. Number three is the Bank of Japan. Number four is the PBOC. All figures are in US dollars. I repeat, all figures are in US dollars. Federal Reserve as of October 2022 is having a balance sheet of 8.7 trillion. Congratulations, 8.7 trillion. From the last 6 months, Powell is repeating the same tone that Federal Reserve balance sheet would cut down. And from the last 6 months, I am in the public domain that rather than cutting the balance sheet, it is coming up. But we should congratulate to paid media. We should congratulate to the paid newspaper, magazines, who never reflect this fact. So Federal Reserve balance sheet is not cutting, rather it is moving up. And as we speak, in October 2022, it is around 8.7 trillion. About European Central Bank, Bank of Japan and People Bank of China, the figures are of September 2022 because October figures are not available as we speak. And the financial position of these three are also not very good. European Central Bank balance sheet is 8.7 trillion. Bank of Japan is approximately 4.8 trillion, while People Bank of China is around 5.7 trillion. I repeat, all figures are in US dollars. So if I speak about Federal Reserve, it is 8.7 trillion. ECB around 8.7 trillion. Bank of Japan 4.8 trillion, while People Bank of China it's around 5.7 trillion. I did the simple mathematics, took my favorite scientific calculator out, cumulatively add the four, and I got $28 trillion. Congratulations. The top four central banks of the globe, I repeat, top four central banks of the globe have a balance sheet size of $28 trillion. How much is the top 10? How much is the top 20? You can easily guess. You can easily guess. Like I said, the video we are shooting on 30th October 2022, when European Central Bank hiked their interest rate by 75 basis point. Very good. 75 basis point, knowing that Europe is facing a huge mess thanks to Russia-Ukraine war. And unfortunately, I repeat, this mess is now turning out to be a nuclear war. But I will not deliberate much into this piece about nuclear war or not. We'll have a separate video in that regards. Today, BMW, I don't think I need to explain who is BMW, one of the very well-known car maker of the globe. They wanted to, in fact, rather, they quitted UK. And why? Because of energy crisis. European fiscal situation, I repeat, European fiscal situation is extremely poor. Extremely poor. And unfortunately, knowing this, European Central Bank hiked the rate by 75 basis point, and previous also they hiked by 75 basis point. And now I am telling you that Europe would be in a big trouble. Big trouble, I am telling you. The trouble is mounting for European Central Bank. Guys, before I continue with Federal Reserve, I collated few statistics from the internet. You know that I love research and I never speak until I have the facts with me. So I love to speak the facts. You know, Powell, the most compromised central banker of the globe, whenever he is in public, he continued to repeat that the labor market of the US is very strong, very strong. And after reading the book, which I got it from Amazon, I repeat that I am at the fag end of the chapter number 3. But even at the fag end of the chapter number 3, I am very clear that my statement about the Federal Reserve is very correct. It is not the most compromised, rather the most scandalous central bank of the globe. I collated 18 companies, 18, 1 8 you can say, because time is a constraint. I cannot collate, the whole universe. Twitter is cutting 75% of the workforce. Congratulations, 75%. Tesla is cutting 10,000 jobs, 10,000. Ford Motors is cutting 8,000 jobs. Intel is cutting thousands of jobs, but as we speak, we don't have an exact figure by Intel. Microsoft, one of the largest software companies of the globe, already cut 1,000 jobs. 1,000. God knows, maybe more jobs on the way. Facebook founder Zuckerberg make it very clear that he would be cutting the jobs. Rather, he freezed the hiring budgets, and he also warned the employees that tough times ahead. I went through few articles on the internet. The authenticity of these articles is really doubtful, but these articles claiming that Facebook planning to cut 12,000 jobs. Oh my god, 12,000 jobs. Snap, a loss making company. I hope many of you would be using Snap. They have their app and so on and so forth. Snap already cut 1,200 jobs. 1,200 jobs. Please check the annual report of the Snap and see how much losses they have in the books. Coinbase, one of the leading crypto firms, they already cut 18%. You heard me very right. 18% of the workforce, which is around 1,100 jobs. Amazon is cutting cost, but as we speak, they're not yet confirmed any job losses. But yes, one thing which Amazon clearly mentioned in the public is that they are cutting the cost. Before we move further, Twitter, Tesla, Ford, Intel, Microsoft, Facebook, Snap, Coinbase, Amazon. Moving to the next page, Netflix cuts 450 jobs. Stanley Black and Decker is cutting around 1,000 jobs. Information by Wall Street. Goldman Sachs, Bank of America, Wells Fargo, Deutsche, UBS, they are already cutting jobs. Rather, Goldman wanted to reorganize their bank. I don't know what is the definition of reorganize. Do not ask me about Credit Suisse. We already uploaded the video about Credit Suisse. and Credit Suisse planning to cut 9,000 jobs. You heard me very right. It's 9,000 jobs. Seagate, an information technology, basically the data player, planning to cut 3,000 jobs. 3,000 jobs. Oracle already started job cuts in US. Crypto industry cut thousands of jobs in the last 6 months. Thousands of jobs. No one in this world, as we speak, except the Lord, the Almighty, superpower, except Him, no one having the data how many jobs crypto industry cut. General Electric cutting hundreds of jobs in US. Like I said, I don't have time to collate the whole list, but this is really stressful situation. I mentioned the name Microsoft, General Motors, General Electric, Twitter, Tesla, Goldman Sachs, Credit Suisse, Seagate, Stanley Black, Netflix, and a long list. Still, if you see the Powell, he will continue to repeat the same tone that labor market is strong. Where the hell labor market is strong? This is what I would like to check with the Federal Reserve. And that is the most important point. So next time, I repeat, next time, when you see when you see Powell, please check one question from my side. Where the hell is the labor market strong? Federal Reserve monetary policy would continue to be idiotic, would continue to be stupid, would continue to be manipulative, I must say. I don't expect Federal Reserve to cut rates before 2023. And when I say 2023, I mean to say in the first half of 2023, I don't think Federal Reserve to be cutting the rates. Rather, the few people who are always hyped by Bloomberg, compromised media, they are again and again saying that the terminal rate might be touching 5% in 2023. So what is terminal rate? Terminal rate is that as we speak, the terminal rate is 3.25%, which means on 2nd November, around 2 days from now, if Federal Reserve would be hiking by 75 bips, assuming 75 bips, then the terminal rate will shoot immediately to 4%. Between the range of 4% to 4.25%, I would say. And if one more hike of say 50 bips, assuming in the December meeting, then the terminal rate would be approximately 4.75%, which precisely means the mortgages, the bank loan, the home loan, education loan, working capital loan, the investment bank funding to the corporates, and all loans, whatever you mention and whatever I not mention, would become extremely expensive. Extremely expensive. United States is already in deep recession. There is no doubt about that. And the statistics I have already provided to you, whether this is Twitter, whether this is Tesla, whether this is Microsoft, or maybe the big names. Guys, these all are big names. Please take a note of that. What about the small names? We haven't discussed that. And unfortunately, we cannot discuss that because there is no information. Because if the big names, so example, Seagate is one of the leading, I would say, data companies in the world. I personally own 3 hard disks of Seagate, which I'm using to store my data. I am rather a permanent customer of Seagate. So whenever I buy a hard disk, I buy Seagate without any discussion with the vendor, without any discussion. Now, Seagate is a brand, you know, and if companies like Seagate is cutting 3,000 jobs, not 100, 200, 300, 3,000 jobs, it means the mess is already here. And you cannot ignore the mess. Let it be honest. If you wish to ignore the mess, that is a separate problem, but the mess is already here. United States is moving towards the depression. And how can I say that? I can link this with, Bank of Canada statement made on Friday, which is 29th October 2022. Bank of Canada governor, and I really loved the way he spoke on Friday. He made it very clear that we are at the fag end of the tightening. Now, technically, it means that do not expect us to hike the rates exorbitantly in the upcoming meetings or in near future, because whatever in our hands, we already did that. So in this meeting, which concluded on Friday, Canadian dollar, people were expecting that Central Bank of Canada would be hiking by around 75 bips. But they hiked by 50 bips. And clear warning which they gave to the people is that please do not expect us to continue with the same pace in the near term. It means only two central banks left in the game, which is Federal Reserve and European Central Bank. Apart from them, all central banks have raised their hands and they made it very clear that they won't be hiking the rate. I personally see that Federal Reserve would be hiking 25 bips each, unsaid. Unsaid means unsaid. 25 bips each every policy meeting in 2023 June. So if we are having 3 policy meetings, I would say if we are having 3 policy meetings till June, then Federal Reserve would be hiking at least 25 bips each. And when this depression shapes up, which I am expecting that it would be shaping somewhere in April and May 2023, although we are already in recession and I provided you the statistics, but that's a separate thing that the compromised media do not agree to it and they won't agree with it. Statistically speaking, US would be having depression by somewhere April or May 2023. Huge job losses on the cards. Probably, I would say, the central banks would be in a very tough situation, and I would be explaining this tough in my upcoming videos. I would see that Federal Reserve stupidity would continue in 2023 also, and Powell would continue to repeat the same tone, which is he would continue to hike the rates, which is irrespective whether the economy would go in zero. To him, it hardly matters. He's getting his salary. I strongly feel that US, which is sitting at around 32 trillion, I would repeat 32 trillion of debt. And if Federal Reserve would be hiking by 75 bips this time, then the sovereign curve, which is also known as benchmark curve, would touch 75 bips plus, which means around 4.25%. Between 4.25 to 4.5%, I would say. Spreads are separate. The interest cost for the US would be way beyond, way beyond. Henceforth, the dollar is towards declining, and Chinese yuan. I don't know how many people are aware about that. According to a statistics in the public, Chinese yuan already touched as the fifth most traded currency of the globe. You heard me very right, guys. Fifth most traded currency of the globe. I see a fall in dollar. Russia, Ukraine, $32 trillion debt, monetary policy of Federal Reserve, heavy unemployment in the United States, thousands, rather millions of job cuts in US, and more importantly, the debt is rising. This is what I can say, and this is the outlook of US monetary policy. Thank you very much for sparing your time. This is Rahul Magan. You know my number, +91 9899 242 978. Thank you guys, and have a great time ahead. Thank you.